Here we have the daily price chart for Broadcom Incorporated, stock ticker AVGO. So as we can see here, the stock has seen a fairly impressive run higher over recent trading sessions. Essentially, we rallied from just around 128.50, and the test of the stock's 200-day exponential moving average, all the way to share prices that reached highs of 172.42. So this is a very significant move higher in a very short period of time. And this does raise some key questions about whether or not current share price action is sustainable at current levels. So in this video, we will be watching some of these strategies that I'll be using going forward, and we will identify some very specific price zones which can be used to execute profitable trading strategies for this stock. So as we can currently see here, the share price did see a massive run higher after testing this 200-day exponential moving average at the bottom of this chart. That would be this rising blue line at the bottom of the chart. Overall, this was very significant because previously the main support zone that came in for Broadcom posted at 130.25. This would essentially be the price low from the June 3rd trading session. And as we can see here, this recent price move lower did actually break that low. So for anybody that was implementing any sort of breakout type strategy, possibly entered into some sort of short position, likely got stopped out here very quickly because this share price here just completely reversed higher even after breaking to new lows. So this was very significant, but as you can see here, the 200-day exponential moving average was really sort of the savior for this stock. And this did prevent share prices from continuing to move lower. So in some sense, this was actually a false breakout to the downside. If you compare this 130.25 low to this 128.50 low, it wouldn't be surprising to see some people enter into short positions at that point in anticipation of a further move lower, possibly toward a retest of the April 19 low, which came in at 119.76. So there could have been some extension here to the downside. However, we really did not see that. We really did see a bounce off of this 200-day exponential moving average. So as things currently stand, we need to sort of reassess this share price action, given the fact that a lot of these analysis structures and trend lines and things like that would need to be redrawn after a false price breakout like that. So what we can see here currently is the fact that share prices did significantly move higher. We have seen share prices move higher also in the relative strength index, as we can see at the bottom of this chart. However, the share price itself has not moved into overbought territory just yet. We're actually seeing a little bit of a bearish divergence here in terms of share price action, because share prices are moving higher, but a lot of the same activity is not being confirmed in the indicator reading. In addition to this, we do have some very important event risks that are coming next week. Specifically, what I'm talking about here is the NVIDIA earnings release. This is going to be very important for the market as a whole, not just the technology space. So this is an event that is very likely to create volatility here for all technology stocks. And for anybody that's sort of risk averse or not really interested in trading in uncertain markets or volatile markets, next week might not be the best week to be trading, because as you know, we're still in a summer trading period here. Liquidity levels are really decreasing at the moment. We can even see that in this price chart. Specifically, if we look at the trading volumes that have been associated with Broadcom recently, we can see a very significant decline here in trading volumes. So as the stock was posting its all-time highs, we did see major spikes here, but then that started to reverse. And then, people started to take profits here at these higher levels. This was also a very volatile trading time because, as you might remember, if you trade the stock, there was a very significant price gap that preceded this movement higher. So, this was a volatile, uncertain trading environment, and it does look as though many people wanted to take profits after the stock reached these elevated levels above $185. So ultimately, what this resulted in was a major decline in trading volumes. So, this is worrisome for a few different reasons, because this increases uncertainty and it increases the potential for volatility. In other words, it really doesn't take as much money to push around share prices and to move stock prices. Much smaller amounts of money can send prices higher or lower. So, this is a volatile trading environment. We're still in the summer trading period. And then next week, we also have this major mega earnings release coming from NVIDIA. So we do have to sort of look at this indicator reading here and make an assessment of whether or not share prices really can continue moving much higher. As we can see currently, the RSI, the relative strength index, is sort of bouncing off of its own exponential moving average. We really didn't get much of a test here, but it is starting to point in the upper direction after moving closer to its EMA, which would be the yellow line. The RSI is the purple line, and the yellow line is the moving average of the relative strength index. So as we can see here, the RSI itself is starting to point higher, and currently we're looking at levels right around 58. So what this does mean is that we could see an extension higher here before the share price itself starts to become overbought. However, we're looking at about 12 points in the RSI, whereas movements to the downside would have much more room to extend. So if we do see an uncertain market, possibly an earnings disappointment from NVIDIA, this is something that could definitely send share prices lower, and we could start to retest support levels right around the 100 period. This would be the 100-day exponential moving average, because this is the daily chart that we're looking at here. This rising purple line here is the 100-day exponential moving average. Let's draw a price arrow here. So as we can see here, a downside retest could send share prices back through the 150 level, which would be important because 150 is a closely watched psychological level. This is a level that's going to be watched by significant portions of the market. And if we do start to see share prices move through there, it could also inspire some panic selling for this stock. Now, we have to remember, all of this is not going to be related to an issue that's directly impacting Broadcom itself. If we do see sell-offs in the broader market or disappointments with NVIDIA, this doesn't necessarily mean that the fundamental backdrop for Broadcom has actually changed. So, if we do see major dips lower here, this could actually create some interesting buying opportunities for the stock, depending on how price structures actually shake out. And it is going to depend largely on broader market behavior within the technology space and within the S&P 500 and NASDAQ as a whole. So here's the current market analysis for Broadcom Incorporated, stock ticker AVGO. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.